Hi guys, happy Tuesday. Today is a very special day. It's Tuesday, February 22nd, 2022. All the numbers today, it's the number 2 and it falls on a Tuesday. So very, very special day. I know a lot of people pick today to get married because this has a special meaning and 2 means couple. So for those getting married today, wish you all the best in your marriage. And if you were just joining me today, hope you had a great family day long weekend. Wonder if you went away. Did you do anything fun? Let me know. But we're doing our weekly real estate market review on Tuesday because yesterday was a holiday. So a lot of brokerages were not open. So we couldn't get up-to-date information about things that happened the previous week. And that's why I'm doing this on a Tuesday. I might be uploading a little bit later tonight because I've got a few appointments in between before I can get this loaded. So without further ado, let me just get into sharing my screen and we'll get into the analysis. Okay, so let me just move this up. All right. So last week, little bit you probably still see in the news that the market was still doing really, really well. We saw quite a few over asking record-breaking sales. So let's run through the numbers for the week of February 12th to February 18. If this is your first time watching this, we are going to analyze for freehold the whole GTA, which includes Durham, Halton, Peel, York, and Toronto. Just get my pen there. So this is the area that we're doing. And if we look at the numbers from last week, as I've been saying since the beginning of January, when I started doing this, that we are going to see more and more listings come onto the market. Listings usually takes a little bit longer to be prepared. And we have been seeing this trend is that, listing has been going up consistently. If we look at this column here, it shows the percentage of new listing increase from week to week. And we can see that, first week we had, let me just scroll back up. First week we had a big increase. And then we had 40%, 10%, 25%, 21%, 19%, 13% increase week over week. So we can easily say that from week to week, we're looking at least 15 to 20% increase in the number of listings. What that means is there are more and more inventory on the market, but the demand side it's keeping pace, but the gap is getting bigger and bigger every week. So I've been saying I have a prediction that by March or April, we are going to see some corrections because if the number of listings keeps increasing, but the number of transactions doesn't increase at the same rate, we are going to see many listings that are perhaps they are underpriced, but they're not going to get the price that the seller wanted because maybe next door sold for X amount and they want to achieve that same amount. They're not going to get that. And what will happen is they're going to relist. And so at a higher price. And so we are going to see more and more inventory on the market, which is good for the market as a whole. With inventory shortage, it's really not good for buyer or seller because if for the seller side, if there's not enough inventory, what happens is a lot of properties actually arbitrarily get bid up to these high prices there is actually a risk of them not closing. And so we want market to be a little bit more balanced. Buyers have, more options. And so everybody is, the whole market works in tandem. But right now it's pretty lopsided. And so every week we're seeing more listings on the market, which is a good sign. We're still looking at percentage of sold over asking. It's still 87%. So that's really, really high. Typically, we're looking at maybe 70 to 75%, but right now we're sitting at 87%. So most listings are still selling over asking, but the number of transactions has not been increasing at the same rate as the new listing that come out. If we look at the average price, so this column is the average price. And so we go to our chart below, and we can see that the home price, average home price from week to week, is pretty stable, has been stable. Now, this looks at all types of property, all types of freehold. So freehold could be townhouse, could be semi, could be a detached. What I cannot do in this chart, or maybe later on if I have more time, is break it down by category. So even though the average price hasn't really gone up, it could, the individual category of types of property may have gone up. So we're seeing a lot of townhouses, especially the bigger ones, are pushing really, really close to detached prices now. They may be like 200K difference. So that's really driving a lot of the average homes right now. Let's say you're looking for something around 2,000 square feet or 2,100. That type of townhome, that type of product is the average price, 1.7. If we have something smaller, maybe 1,500 or 1,300, then you'll be looking at around low 1.2, 1.3. Anything over 2,500, you're looking at over 2 million. So when we talk about 1.6, 1.7, we're talking about something that isn't too big, but that seems to be the majority of the product that are getting sold at those prices. Now, number of new listings sold, we look at this column, number of new listings sold, 240. Still healthy, it's keeping pace. So what that means is what listing gets sold within the same week that it's listed. And it's this line here. You can see that it's pretty stable. So if you price it right, things are going to sell within that week. If you overprice it, or if you hold back for a long time, then yeah, it might take a little bit longer. But so it depends on the strategy that you want to employ when you sell. Looking at the condo side, this is the condo side. So in case you're watching this for the first time, for the condo, we are looking at just 416 area. We're going to focus on, because that's where majority of the condos are. It's in Toronto, and this includes high-rise and condo townhouses. So in the last week, February 12 to 18, there were 790 new listings. Now this number, I will adjust every week for the previous weeks because some of the data is not available until 2-3 days the week after. So right now it's 790, and it represents, and then we had 516 sales. Again, this number will be higher next week when I come back to revisit the week before, because some sales are not, especially condos. Sometimes you have to review the status certificate, so it takes could be up to like 10 or 13 days before the sale is reported, and so they will report retroactive to the day the offer was accepted. So this number will go up, but right now it's 513, so 65% list to sale ratio. The percentage of over asking is 82%. Just as a little information, because if you look at the 82%, the percentage so over asking so high, when we look at the average sale price, it has steadily going up, and from the beginning of January until now, it's been about 7 weeks, I would say. 1, 2, 3, 4, 5, 6, 7, yeah, 7 weeks. The average condo price has gone up about 15%. So if you bought something beginning of the year, it has already gone up 15%. You already made 15% on your return. So that's where we are. Condos are still really, really hot right now. We're still seeing a whole bunch of multiple offers. If you price it right and the unit shows well, you're going to get 5, 10, 15 offers. I'm seeing even more, like 30 offers for a condo. So if you have a condo investment property, right now is the best time to sell it. If you want to recoup some cash, sit on it, wait till the market corrects and go in again, right now is the best time to do it. So average price right now sits at 842. And what are those average price product? You're looking at something that's larger 1+1 or smaller 2-bedroom. 2 bedrooms are going for about between 8 to 950 right now. 2+1 can hit $1 million. Also depends on the age of the building and you know, the maintenance fee and so on and so forth, but you get the idea. All right, so this is the sale side. Everything is still trending up, and so if you're a seller, still great time to sell. If you're a buyer and you think the prices are way too high, you can wait a little bit. My prediction is by April, we're going to see a slight correction. Okay, so let's look at the rental side. Rental side of things is again, it's not much change in terms of the trend from the week before. It is still, we're still getting less and less listings coming onto the market, and the demand is still there. Like this gap is very narrow. So the orange line is the number of transactions. So we had 805 transactions and only 961 came onto the market. And the percentage increase is declining. So, you know, -4%, -3.6%. So it's been quite a pretty good demand for the leasing side, although I do have a couple of property on for lease. We're seeing a little bit of a pullback, slower right now, not as hot as I would say December, November. And it could be the timing of the year. People don't, like tenants don't want to move during winter. We may see this pick up by March, when tenants have to think about, okay, maybe they move to a different area for school and all that. So hopefully it will pick back up. But last November, December was really good leasing market. In terms of the price, rental price for each category, again, not much change. It's pretty flat. So this reflects that the rental market is pretty balanced. If you have a rental property and you price it a little bit lower, not too aggressive, you are going to get it rented out. But if you price it a little bit too aggressive, it may take a little bit of time. But depending on your situation, sometimes you don't want to start too low, because especially for older condo that has rent control, you want to have a higher base so that next year when you increase it, you'll be able to increase for a little bit more. So that's the state of the market for last week. And as part of my market analysis, I always throw in a little bit of a tidbit at the end to help buyers and sellers. And this week, I want to talk about a scenario where the seller doesn't want to close. Now you say, hey, who would do that? Like, that actually happens quite more often than you think, especially for deals that have a longer closing date. So here's a scenario. Let's say the house is listed at $999 to attract multiple offers. And they do get multiple offers and it sells for $1.2 million. Seller's happy on the offer night. Buyer's happy they got the house, but they set the closing 4 months later. Now, at the current rate of property price increase, month to month could be up to 10, 15%. So let's hypothetically say the property value on closing 4 months later, it's going to be at 1.35 million. So the seller says, hey, we sold it 4 months ago. We only sold it for 1.2. I don't like that price, so I'm not going to close. So in this scenario, what can the buyer do? Like what would be the normal outcome? When I say normal, take into account that everybody has done their job properly. The offer is done properly. There's no mistake, nothing to be picked on. It's simply because the seller doesn't think he's getting a fair deal 4 months later when the market has gone up a lot. And we are going to see, actually we saw quite a bit of these cases in 2021 when the prices just keep shooting up. So there were sellers that sold in early March and they wouldn't want to close by September because the market has changed so much, or by July, August. So what can the buyer do? Well, first of all, the buyer can stay calm. In this instance, if the seller refuses to close on closing day, the problem is with the seller. Usually there's no problem with the buyer. If the buyer is ready to close, it's got the money, it's done all their due diligence, they're ready, willing, and able to close, then there's a problem with the seller. And so the buyer should right now, on closing day, if they receive a notice that the seller is not closing, they should stay calm and they should seek a litigation lawyer who deals with these type of situation, and not use the real estate lawyer unless the real estate lawyer has litigation experience, because this matter most likely it's going to court, and when it goes to court, the litigation lawyer needs to be able to show a few things. And so the real estate lawyer does not practice that. He may not be as well versed as to how to present that case. So what can the buyer do at that point is to register a CPL. A CPL is Certificate of Pending Litigation. Basically, it puts a warning on title that, hey, I'm going to be suing this seller. Do not purchase the property, do not mortgage the property, or do not finance the property. And it's a notice that gets attached to the listing. Let's say the seller says, oh, price is too low, I don't want to sell, but right now I've got a backup offer right now giving me 1.4 million. I'm going to sign that offer and with sell it to them. When they go to closing, their closing lawyer does a title search. They will see that there is a certificate of pending litigation, And so the buyer's lawyer is not going to close, because if they do close, that means they are taking on as a defendant. So they won't close. So right now, you register that. And so the buyer will go to court. The buyer will explain to the court that they demand specific performance. So what does that mean? To demand that, the buyer must show the court that because of the rise in prices, the buyer cannot reasonably use the same amount of money to buy something similar. Or if it's a more unique property, you can also attribute that and say, hey, I needed a house that's within walking distance to a certain school. And so that attribute will become the uniqueness of the property that didn't close. So these type of reasoning is what the litigation lawyer needs to draft up in order to prove to the court that, Mr. Judge, you need to force the seller to close the deal because he's the one that backed out, doesn't want to close, and we can't reasonably find another property because in law, the party that has been injured, which in this case is the buyer, needs to mitigate their damages, but there's nothing for him to mitigate. He can't use the same money. First of all, the deposit is still being held by the listing brokerage, so they don't have another, 100K or whatnot money to buy another property. And secondly, it's not that easy to find something replaceable. So you need to prove that the property is very unique, and you need to show that you cannot replace it and demand specific performance. So the outcome likely is going to happen is seller will be forced to close, and seller will be out tens of thousands of dollars, legal fees, and lost opportunity. Because if the seller sold it, 4 months ago, and they quickly bought something, that property would have gone up the same amount as the one that he's trying to not close. So he's lost the opportunity to buy another property. He's lost the legal costs, and buyer's going to get the house, and maybe by then it'll be worth over 1.4 million, but the buyer's going to get the house at 1.2. So not closing is very, very expensive to the seller. Remember, a deal is a deal, and courts do not condone reneging on a deal, especially a real estate contract, and will almost always enforce specific performance unless there are some errors or something that the defendant, the party that didn't want to close, can show that, hey, there is another house that they could have bought when they knew about us not wanting to close. But in any case, the penalty is pretty severe. The seller is going to lose lots of money. So if you're a seller and you think that you didn't get the market price 4 months ago, just close the deal, right? Close the deal, and everybody can move on, and you don't have to be dragged around with a lawsuit. Because with the CPL, lawsuit like this likely going to take 2, 3, 4 years. You can't do anything. You can't sell the property. You can't move on. So it's really not worth the hassle of fighting this. Okay, so I'm gonna stop sharing. Okay, so that wraps up our weekly review for the week of February 12 to 18. Hope you have a wonderful rest of the week. It's a shorter week, and for kids going back to school, or, I know a lot of you are going back to work. Have a wonderful, wonderful week, and thank you so much for watching. I will be back next Monday for another review of what's happening in the real estate market this week. Take care. Bye for now.